Hi, this is Alan from Alpus Group, and I'm going to talk to you today about thinking like a real estate investor. This is from a news article by Robert Kiyosaki, and it describes the success of real estate investors. The most successful ones don't submit to the daily 9-to-5 grind. By working for themselves, however, real estate investors are inherently responsible for their success rate as well as their failure. The ones that succeed have one thing in common: they've learned to think like the rich. Do you want to get out of the rat race and retrain your mind? Things like the elite. Here are 5 strategies to help you just do that. Number 1, know exactly what you want to achieve. It's surprising how many people can tell you what they don't want out of life or business, but few can definitely tell you what they do want. It's this difference that can make an impact on a successful real estate investor. The key is to stop thinking about the things you don't want and start thinking about what you do want, and more importantly, how you will achieve them. You know you don't want to work for someone else. You know you don't want to live 1 or 2 paychecks away from disaster. Reframe these ideas in your mind and change them into directives. I want to work for myself every day. I'll do this by treating myself like a leader and set my own goals. I want a solid cash flow, and I know exactly how much money I need per month to cover my living expenses. Putting actions to these wants is key. A successful investor knows how much they need, and they develop a plan of action to generate the equivalent amount of income. How many properties do I need in my portfolio to accommodate this figure? What types of properties can I invest in to create this cash flow? How long will it take me to reach this goal? And ultimately, how and when will I roll these properties into larger cash flow properties? To back it up, successful investors map out their plans with spreadsheets and cash flow projections that maps the road ahead and helps support these numbers. But your plan will need to be fluid. Factors such as an ever-evolving market, education, and economics will force you to adjust. Make cash flow your investment goal, not capital gains. You see and hear about it all the time now. House flippers, they're everywhere. Buy a distressed property, fix it up and sell it high. That's the idea, right? Successful real estate investors see it differently because there's a problem with just being a flipper. You're gambling on the idea that the value will rise in the future. But what if the market goes down? What if it crashes? Your entire return hinges on the price going up. But if you're investing for cash flow or rental income, then you're always on the receiving end of positive cash flow. This is an asset that can put money in your pocket for years to come. Successful real estate investors know this. Your investments are assets, your cash flow is increasing, and you're not gambling on the market. If your asset goes up in value, then it's icing on the money cake. Be an optimist, but always be a realist. Even the best real estate investors lose money. It's never the goal, but it's a reality for most. The best investors learn how to minimize potential risks. This is called conducting due diligence, and you must do this before every property purchase. It seems like an obvious point. Make sure you check this out before you buy it, right? But there's much more to due diligence than just checking property liens and taxes. A successful real estate investor puts each purchase through a risk assessment they've created to find financial pitfalls. You should be factoring in vacancy rates in the area, HOAs, insurance costs, and more. For example, you could have a great property and be ready to lease it out for positive cash flow, but what if the HOA doesn't allow renters? What if the insurance is so high that it puts the rental rates out of reach and the property cannot be rented to cover all of the costs and expenses and add profit? Be thorough in your evaluations of a home or property for investment. But you don't know everything. But setting up steps to protect yourself from investments that can cost you money rather than bring you money in is the mark of a successful real estate investor. This is Robert Kiyosaki's book. It's time to switch to this asset class now. Real estate prices are continuing to rocket. Everything is overpriced now. As such, I'm looking for other ways to invest. There's a new asset class that was formed four decades ago, and I'm amazed how few people know about it. Go here to discover what it is. So tip number 4 is learn how to attract and keep tenants. We always seem to want something newer, better. Your older, reliable car is great until you take a ride in your friend's shiny new brand new car, right? Your television set works just fine, but once you watch the game on your buddy's 80-inch plasma TV, it doesn't seem enough for you. It isn't an uncommon feeling. You are made aware that there's something better out there. When it comes to real estate investing, it's good to understand this notion about people. You want to attract tenants. You need to make them aware there's something better available to them. There are decent apartments down the road, but you have a single family, 3-bedroom with a nice patio and great curb appeal. This is where you shine. There's a caveat to this, however, and it's important. Do not over-improve a property. If you put too much money into a home or property to make it better than the competition, it still has to fit into the budget of the property. Many people love big granite countertops and soaking tubs, but if you spend the money to do that in a Section 8 rental or any lower income rental, it might not be the best investment of your money. Your updates should fit the type and style and budget of the home you're investing in. So where is the sweet spot between too much improvement and too little? If you're showing a home to potential renters, it's likely to be empty, so your walls and trim and paint job will stand out. Make sure a property is freshly painted and without holes in the walls or stains on the carpet. The broken window theory is a good rule of thumb. It says that if you leave a broken window, there's a greater likelihood of additional windows being broken. Over time, vandalism only escalates. This will cost you money, and renters are more likely to treat the property the same. On the other hand, a home with some nice upgrades, fresh paint and clean floors, has more of a chance of retaining renters who take care of the home and remain as renters much longer. Tip number 5, keep your eyes open. Being successful in real estate investing is knowing that the business is a numbers game. The more properties you find, the more offers you submit. The more offers you submit, the more deals you close. The more deals you close, the more money you make. To get and keep the numbers in your favor, you should always keep your eyes open. But the reality is you're only one person, and to get these numbers, you'll need to find ways to expand your reach. You can establish multiple ways to find new opportunities, as well as set up ways for opportunities to find you. This is also called using a bird dog. Using a bird dog in the business means having an individual or team hunt and find properties and opportunities to bring back to you. This can be family, friends, colleagues, or anyone who's out in residential neighborhoods regularly, like inspectors, landscapers, cleaning services, etc. To recruit a bird dog, you want to educate them on what you're looking for in a property, how to spot them, and what you're willing to pay. Go over the following: potential properties that do not have a for sale sign in the yard. You can find these on your own. Vacant properties, bank-owned properties, vacant but with a lockbox on the door. These are the properties that you cannot readily find on the internet or through MLS. Spot these properties by looking for homes with boarded up windows, piles of newspapers, overstuffed mailboxes, broken windows and doors, no curtains or blinds, and overgrown or dead grass. Assess the property by having your bird dog do his initial assessment first. Is it in good, bad, really bad, or awful condition? Request at least 6 photos of the property from your bird dog that shows all sides of the home, and ask them to always include as many photos as they can. Using a bird dog to bring more opportunities your way increases the numbers game and increases your ability to be successful in real estate investing. If you're reading this, chances are you're already started to think like a successful real estate investor. Where other people see risk, you see potential and cash flow. Simply dreaming it will not make it happen, but implementing tried and trusted strategies such as these is a great start to thinking like the rich. It will take financial education and detailed planning, but to pay off is success. And this article is by Robert Kiyosaki, editor of Rich Life Daily. If you're interested in property investment or development in the UK, then call Alan at Alpus Group on +44 7539 141 257 or +44 333 224 1257. You can schedule a call with me at calendly.com/AlanJE, or you can drop me an email at alan@alpusgroup.com. Cheers for now.